Welcome to Phillip Futures Market Watch. My name is Hoay, and I'm an investment analyst with Phillip Futures. Global equity rallied since the second half of last year, largely due to liquidity provided by major central banks in the world. Prices have undergone correction recently due to fears of a slowdown in US asset purchase. With benign inflation in US, we do not expect US Federal Reserve to taper the pace of asset purchase in the central bank meeting next week. With markets fearing liquidity withdrawal by US Federal Reserve, we remain cautiously bullish on Taiwanese equity index, TAIEX, because of three key reasons. Firstly, with inflation remaining subdued, there is scope for a central bank in Taiwan to keep monetary policy accommodation longer. The low interest rate environment and ample liquidity will continue to bolster the performance of Taiwan equity index in the second half of 2013. Secondly, Taiwan equity price is likely to benefit from the stimulus package rolled out by the government. The package covers four major areas such as expanding consumer spending, boosting domestic investment, encouraging innovation, and revising capital gain tax on stock sales. When capital gain tax was first introduced, it set a psychological barrier for TAIEX index at 8,500 points because a transaction tax will be levied on the stocks sale once TAIEX index trades above 8,500 points. We noted that the trading volume has dropped since the introduction of the capital gain tax. Market sentiment is likely to be boosted if the threshold of 8,500 points is removed in the revision of the capital gain tax. Thirdly, Taiwan equity performance is likely to continue to gain support from stronger economic cooperation between Taiwan and China. Economic Cooperation Framework Agreement reduces trade restrictions between China and Taiwan. As the framework enters the third phase this year, trading link between China and Taiwan continues to deepen. Reduction on restriction of China's investment into Taiwan, such as increase in the ownership ceiling of Taiwanese banks, is likely to see further investment flow into Taiwan, boosting equity prices. The key risk to a stronger equity market in Taiwan is China's slowdown, in view of the high export to GDP ratio of Taiwan and Taiwan's high export exposure to China. In 2012, China accounts for more than a quarter of Taiwan export value. Manufacturing PMI is a leading indicator of economic health. A reading above 50 shows expansion in manufacturing sector, and a reading below 50 shows contraction in the manufacturing sector. The latest HSBC manufacturing PMI for China has shown the first contraction in 7 months, and HSBC manufacturing PMI for Taiwan has similarly shown the first contraction in 6 months. Despite the risks highlighted, we continue to be cautiously bullish on Taiwanese equity index. For more information on the risks and returns of investing in stock index futures, please approach any representative from Phillip Futures for a further discussion. Thank you, and stay tuned for more Market Watch videos.